Naturally, many traders will ask, what is considered a valid violation of a trend line? Well, there are different ways to do that, but for starters, two consecutive closes below the uptrend line will signal a downward reversal, where two consecutive close prices above the downtrend line will signal an upward reversal. Now, we have to be a little bit cautious here and say that for the close prices to qualify, the corresponding candlesticks should be of an average size. Small candlesticks will not qualify. This is what I'm trying to say here. Now, these candlesticks have to convince the market, the analysts, the traders, that they are determined to move the market in the corresponding direction. Now that we cleared that up, let's move to another way, another filter. Now, the next way is through the 3% rule. Actually, it's not really 3%, it's 1 to 3%. It's 1 or 2% for lower time frames and 3% for higher time frames. In the following example, I'm sure you will agree with me that 1 or 2% filter will suffice to qualify a violation of the uptrend line. In the following example now, in the next example of gold on the weekly time frame, you will agree with me that a 3% filter would be more appropriate. Well, the third way, the third filtering technique to qualify a valid violation of a trend line is the Friday close. The Friday close is very important as it shows the determination and commitment of the traders to keep their positions open during the weekend where anything is possible. Now, imagine that there is a Friday close below an uptrend line. This shows the commitment and determination and belief of these traders that the market will reverse to the downside. Similarly, a Friday close above a downtrend line shows the commitment and determination of these traders that the market will continue in an upward direction. I hope this is clear. See you in a while.
Hi guys, don't forget to subscribe and press the bell to keep up with new videos.